Now, while some market experts see an oversupply of housing and a potential continuing drop in prices, my next guest takes a different view. Here is to explain all this is Steve Hagenbuckle. He is the managing principal of TerraCap Partners. Steve, good to have you with us. Thanks for coming in again.
Thank you.
Okay, so you've got a view that we should not be so worried about this potential decline of housing prices. You don't think that's set to continue, nor do you think that we're going to see a fall off in sales, right?
Correct.
Why is that?
There's two major misconceptions going on right now. Number one is that we overbuilt between 2003 and 2006. At the peak of production, we were doing 2,100,000 units. We did 2,100,000 units in 1973 and 1979 with much smaller populations. Those units were ultimately absorbed. The other big misconception going on right now is that foreclosures equal additional supply or inventory. Not true. It's a displacement of an individual from an owner to a renter. But regardless, either way, we have a population growth constant that's been the only constant through the last 4 recessions. That population growth constant has been 1% per year for the last 40 years, going back to 1973. It's the only constant through the last 4 recessions. Now, if we look at those last 4 recessions, the minimum production that we did was 1 million units back in 73 and 79 with much smaller populations. Right now, we're producing a seasonally adjusted average of 582,000 units, which is 500,000 units less than what we did back then with a smaller population. So we hit a surplus in 2006 of about 1.6 million units. But with the current production that we're doing right now, if we stay at that production, by the end of 2010, we'll have a shortage of new housing production and new housing rooftops in the United States of about 1.4 million units.
All right, but let me just step back just for a second, because we haven't really talked about prices. I mean, I understand the idea that, okay, you can make just as many houses or housing units as we did back in the 1970s, but the price that people were willing to pay or that the banks were willing to finance seemed to be completely out of whack with any kind of reality. So, I mean, aren't we still going to get a reality check when it comes to the price of a home?
Well, right now, we across the United States are at an all-time affordable level. We're at a 171 level. Affordability...
What's 171 mean?
171 means is at 100, that means on the average annual income across the United States and the normal pricing within a certain geographic area, with somebody putting 20% down, they can afford that house payment. Okay, that's at 100. 171 is extremely affordable. That's where we're at right now. And actually, the average home price of existing home sales since January of 2009 across the United States has gone up 10% or $17,000. Now, year over year, we're down. But since January, the average home price has gone up $17,000. And in the South, it's gone up $20,000 or 14%.
So you're not worried that we're going to get another leg down, let's say, in home prices or even in home sales right now?
No, no.
Okay, so that leads you to the next issue, which is you think that there are some stocks worth buying, specifically those related to home builders, right?
Right. And I'll tell you why. And also, I think what's really important to talk about is the areas, and what I mean by that is taking a look at the population growth constant, which has been 1% per year, right, and understanding where that population's going to better understand where the investment play is.
They're heading south, aren't they? I mean, isn't this all heading to the southern states?
Right. And you're going to hear some statistics that will blow your mind. 37% of the current U.S. population is in the South. 57% of all new building permits in the last 15 years have been in the South. Now, if you look at the big states in the South, or the big draw states that have been Arizona, Texas, and Florida. With regards to domestic migration, Florida has outpaced Texas and Arizona twofold. Now, so we see where the funnel's going. It's going to the tropical climate, to the warmer weather. Now, Florida, when we're in the state of Florida, and this is what TerraCap does, we try to understand these patterns and then control the property in the path of growth where the population's growing, the residential property, the future building property. So within the state of Florida, 2.5 times as many people have moved from the east coast of Florida to the west coast of Florida as opposed to people moving from the West Coast to the East Coast. 38,000 people have moved from the East to the West in the last 5 years.
So it's not only outside of Florida people coming in, it's also in the state of Florida migrating to the West Coast.
Correct.
You just mentioned, we were talking before you came on, you just closed on a deal. Just explain a little bit about that deal, because that highlights really a price point, doesn't it?
It absolutely does. We just acquired, TerraCap Partners acquired a property that Lennar previously owned in 2005. It's a 200 multifamily unit property. They paid $5.2 million for it, inclusive of the infrastructure, which was about $1.1 million of that. We just closed on it today for $1,050,000.
$1,050,000 down from $5 million.
Correct. And we got the terms that we talked about last time. 10-year financing, seller financing, 6% interest, non-recourse.
All right. Having said that, then, why would you go out and buy the stocks of a Lennar or a D.H. Horton? Why would you be buying those stocks if you're taking their properties at a 1-to-5 ratio?
Well, what happened with them is, being builders in the past, they started seeing that they were making more money from the raw land component as opposed to building the house. So what they did wrong was they started loading their balance sheets with property in the path of growth as opposed to just building homes. At the peak of the game, Lennar had 281 joint ventures or land banking relationships where they were controlling property in the path of growth. So when sales slowed, they didn't have the revenue to pay for the non-performing assets. Shareholders screamed. They had to offload these assets at a significant discount. Since then, they've cleaned up their balance sheets. They're in a 1-to-1 debt-to-equity ratio, very similar to Lennar and D.R. Horton are both in the same place, and I like their gross margins. And, as we talked earlier, I own both of those stocks. They've both performed really well so far. Lennar is up 54%, D.R. Horton 90% on the year.
All right. Got to thank you, Steve Hagenbuckle, coming in from TerraCap.